Hello, everybody, and welcome back to another episode of the Commodity Insights podcast with the crew at Farmers Trading here. Um, a pretty eventful start to the week for the grain markets, I guess. We had a nice bounce Sunday night, and that carried into Monday morning for the grains there, and seemed like maybe we were going to be able to do something this week, Vince. But as we spoke before, it seems like we kind of faded into this mid-session today on Wednesday here at the 24th. Um, do you think we can maybe sustain some of this rally, or what are your thoughts there? Is this just another bounce of the funds getting out of some positions and they're poised to go record short again, or what are your thoughts there?
Part of it, I'm thinking, is a weather forecast. It's, as you know, it's hot and dry for the next couple of weeks, not a lot of moisture, but I think they put some in late morning when they had that noonday forecast on Wednesday. And now we see if they continue to do that. There's supposed to be some showers this weekend. Do they come through? Don't they come through? If we don't get any rain and this pushes a little further east and it gets well into the 90s, you're probably going to get some more out of here. But I think the trade's really believing we've had enough moisture. You're not going to get real excited in here, but just looking at our forecast, we've been fairly quiet as far as the winds the last couple of weeks, but they started picking up on winds, and I think they're supposed to continue to do that. That can change things in a hurry, as most of you well know. So I think we just got to play it by ear. But could you get a 60 cent to a buck rally out of the corn? Could you get another 15 cents out of corn? If we get the right news, yes. I'm not sure there's a lot more than that. And I think producers should be ready to reward this rally. And hopefully we can get a bit more so you can feel better about doing it a bit higher in here. But I'm not sure there's a lot more opportunities unless this really becomes more than the trade is thinking it is at this point.
And as I mentioned, that the fund traders record net short position there, Vince, it did look like in the last commitment of trades report that they did lighten up slightly, but they're still heavily short. What's it going to take for those guys to get out of their positions, or to kind of change the psychology for those guys to maybe turn this market a little bit more long term?
I think for a lot of us, we don't quite know how they operate on where they're at. I think those traditional funds um, just go till they run out of juice and say, I don't think we should push it anymore. But it's probably going to be nothing more than a technical turnaround, similar to what we saw on Sunday night and Monday. Continue that for a few days of being strong all day long. Otherwise, the fundamentals that are going to change it. I don't think the fundamentals. I think it's more technical than anything that'll do it.
Looking over at the wheat market there, Vince, wheat harvest is kind of finishing up in our area, and guys are reporting pretty good yields around and seem to be happy with that. But the price here has kind of been disappointing. Is there some hope there that maybe that can get going, or what are your thoughts there for guys that are combining wheat? Should they be storing it, sitting on this thing a little bit, or just take what you can get here and be happy? Or
I think if you're going to combine wheat, unless you can store it long term, and I'm talking into winter, don't store it. Um, I think the best alternative at this point in time, basis does suck in here. So if you take it to the elevator, see what you get after a couple of weeks. If you could get a 40, 50, 60 cent rally, I would probably move it. If you don't, and basis is still as ugly as it is, maybe you look at it and say, I'll pay a couple of months storage and see if I can get basis to narrow. But basis narrowing very much, I think, over the next couple of months isn't real likely as we come into corn and bean harvest. Those elevators aren't going to want that unless there's something else changes. We do have some fairly serious problems, I think, in France and in some other places in Europe on wheat conditions, but nobody's really caring about them right now with adequate world and U.S. supplies.
And then looking over at the livestock markets, kind of changing gears here. The cattle market, it's been a very choppy trade as we talked. It seems like one day we're higher and the next day we're lower, and we just keep kind of chopping sideways in that wedge formation. Is there any news that you know of coming out in the next couple of weeks here? I know we had the cattle on feed last Friday, but what's that market looking for? What's it going to take for it to decide a direction here and maybe start trending again, either up or down?
I think one, if you break the boxes hard, you're going to get sellers coming in rather heavily. If you can hold this in here and you can maybe get a $2, $3, $4 pop in that box market, then maybe you're going to get some buyers to come back into. But I think they're really focusing on that here at that time of year until possibly mid-August, maybe late August, that you're going to show some weakness in that product market. In the trade, just unless that product market comes along, the likelihood of the packer paying up a lot unless demand from overseas really picks up probably isn't real great.
And one thing I've been hearing from producers and guys kind of noting here is how far behind the futures board is versus the cash, Vince. Is that something that you think is going to continue, or will those kind of converge here? Or I guess how long can this market sustain that wide basis?
You could do it for a while, but typically as we come into the end of August, I'm guessing it's going to come together. It's come together from what it was earlier. And I think that discrepancy between the North and the South really has, and the biggest thing I think you really have to look at when you look at that board is you really can't look at the Northern cash. You have to look at the Southern cash because it's not real often that the North gets that kind of a bonus and a good basis. And I think you have to use those opportunities. And when you're in the North, if cattle are ready, move them on that good basis. Typically, the premium is going to be in the South most of the time.
And then peeking at the cattle sister market there, the hog market, Vince, is it safe to say that we maybe put in a good bottom there? I know we've kind of been rallying out of it here for, I think a couple weeks there. And what news, I guess, turned that market, or is there anything fundamentally that's stirring this, or is it just we had enough of going down and so we decided that, hey, maybe someone should buy this?
I think there's a couple of things, Connor. One of them, I think part of it is technical. You held in there. You have a season in here where somewhere around mid-July, you start to rally into mid-August. August is traditionally that time, seasonal time for bacon, lettuce, and tomato sandwiches. And the one thing that's really been lagging in this market is the bellies. They're somewhere around $30 less than they were last year. The one thing that inspired it, I think, from a fundamental standpoint, is the ham market. Last year at this time, the hams were $91 a box. Now I think they're $116. They are the only cut out there that is above prices of last year and really what's holding it together. And if we could get some of the other cuts to join in, you could maybe keep this going. But it's nice to see each day it inches a little bit higher and put some new high in. We are getting short-term overbought in here, but after taking $16, $17 off, we sure can go a ways yet.
Then looking at the energy markets there, is there anything that you know of that's worth noting, I guess, for producers going into this fall as far as locking fuel up maybe, or any of those needs? Or do you hear anything that stands out, I guess, for the diesel or the oil market or any of that?
Not right in here. I think as we look over the past few weeks in here, when it looks like maybe some of the chances that Trump may have a better chance of getting in when Biden's faltered after the interview and those types of things. I think everybody realizes or believes that if he gets into office, we're going to pump more oil. And so take some pressure off of there. If it doesn't work that way, maybe we go the other way. But I'm guessing that mid 80s, I think is going to be tough to think you can do a lot more than that on the crude side. I think any time if you get cash diesel down in that, threes, someplace low threes, upper twos, someplace, you probably got to jump on it and book a little something, not knowing where it may go, because the chances of it sliding a lot from there, I don't think are real great.
Overall, any other thoughts on any of the commodities, Vince, or anything you'd like to share before we wrap this week's episode up?
I think you look at the ethanol business through the first 3 quarters of this year, we have been somewhere around 6% more usage of corn and ethanol than we did a year ago, which does put us ahead of pace where we need to be for USDA purposes. If we finish out that last quarter, somewhere around a 3% gain over last year, we're going to meet those expectations. This week's ethanol production did drop about 3 million gallons to 322 million, and the stocks actually went up 23 million, which was more than the trade was guessing. Not sure I'd like that, but that might be a little bit of a signal of a little bit slowdown in demand, but that has been fairly good for the most part.
I think that's going to do it for this week's episode then. If we can be of any further assistance to you, check out the website, farmerstradingco.com, for more information, or give us a call at the office. Our number is 605-996-6500. Thank you.